we've talked a lot of theory today on stage, but what excites me about this group is we have 3 real live practitioners here. These are folks who are in the thick of it every day. You know, all of the stuff we're talking about, these folks are how it actually gets done. So I'm super excited to talk to all of you. And I think even, you know, within this group, it's pretty interesting because we have Lisa and we have Dave coming from the client service perspective. And then we have Josh, who's internal at a larger company at Coinbase, if you've heard of them. And so I think we have some different maybe points of view, different perspectives on the digital asset accounting landscape and kind of how it impacts you. And so I'd like to get into that of kind of maybe some things that would differ, Josh, maybe for you being internal versus on the client service side. So Josh, I'll start with you. Can you give me an example of a compliance requirement, a reporting requirement, something that you have to comply with, and how it actually trickles down into your actual day-to-day process and the impact it has on you?
Yeah, absolutely. And I think it was really unfortunate for a lot of us at Coinbase to see Joe Biden veto the overturning of SAB 121, because what this does is it creates a need for us to have this $300 billion item on our balance sheet. And we really don't feel like that it belongs there, but we have to follow these rules. And it takes a lot of work to get to that $300 billion, as you could imagine. So not only does it take a lot of work, it is subject to the same investigation thresholds as other financial statement line items. So we're spending time looking at variances or reconciliation breaks in SAB 121 that are really just a drop in the bucket. And we're really rolling our sleeves up and doing a lot of work here. And what's frustrating about that is it doesn't feel to us like it adds much value.
Yeah. I mean, the cost of compliance seems potentially really large there. Dave, now I know you work with a lot of VC-backed companies at Attivo. Do you see an impact from SAB 121? Do you see it actually, impacting your clients' behavior?
The vast majority of our clients do not custody third-party assets. If we kind of want to have a laugh early on in client conversations, if the lawyers are on the call, even though we know the answer, we'll ask, are you custodying third-party assets? Like it's a dirty word, they'll jump up out of their seats on a Zoom call and say, no, they are not. In all seriousness, we'll talk to them when they're scheduling out their flow of funds, and if they are going to go down that road, just to be ready for the time and the cost investment around FinCEN registration, MTL licenses, et cetera. For the few that do have it, right, getting more tactical, we have to make sure if it's in subledgers like Bitwave, we're not commingling third-party wallets with the companies. We don't want commingled inventories, cost bases, realized gain losses, and then making sure they also have the back-end client reporting system so they can actually report the way that they need to their clients.
Yeah, it makes sense. Surely no one commingles wallets for multiple purposes, Dave,
never.
Right? No, you never see that. Lisa, now at Fuel 3, I know you work with a lot of companies maybe more in the startup range of their journey. So I'm guessing SAB 121 less of a concern for you. So I'm curious, how do you stay informed on the requirements and all the compliance that has to be done, but tailor it down to your actual client needs?
Yeah, when we started talking about, we're gonna talk about what? I had to look it up. I actually read it. But yeah, our clients are in startup phase. A lot of them are still in development mode. They're still developing their products. They're developing their platforms. So they're not really needing really heavy regulation focused financial statements. What we try to do is just be up to speed on things. We know it's coming. Hopefully, if they're successful, they get to be as big. Not everybody gets to grow up to be Coinbase, but some of our clients hopefully will. So they'll need that. So we start to try to lay the foundation for those things. A lot of times, too, if they're in development mode, if we are aware of some of the things that this decision versus that decision, well, this decision, is great, but it's also going to probably bring the SEC to your doorstep, so you might want to rewrite that smart contract to look a little bit different or to do some different things. So we try to think about those things, and we don't implement everything right away. So we call it gap light sometimes is one of what we'll use. So we'll weed out some of the stuff that doesn't apply to them. The other thing, sometimes we're the only financial people in the room, so we're dealing with founders, co-founders, the operational people. So we have to take these regulations that are worded, I don't know, angrily, like there's all this scary language. It's like, high risk and basically like, wow, you shouldn't be touching this stuff. We have to take that, weed all of that out, and make it really digestible for them. Not scary, but kind of boil it down to what they need to know right now, laying the groundwork for the future. The other thing is we consider their external audience, right? So it's both the internal users, our internal users are concerned about burn and runway. Like they don't care about lease accounting, they don't care about a lot of things. But it does start to matter when they start to have external users of their financial statements. So that could be for our larger clients, that could be, audit readiness. It's gap accounting for their auditing. And it could be their board, it could be their investors. So we try to take all the regulations and apply them sensibly to what our clients need.
Yeah, that makes sense. You said something about making them really digestible. This need to know the rules, understand them, but translate them into something practical. Josh, I'm curious, with what you do at Coinbase, could you walk us through maybe an example of what that process looks like of taking a requirement and how it gets down to maybe a decision that needs to be done internally or a process that you need to put in place?
Yeah, so I was fortunate enough to be able to lead Coinbase through the change in accounting standard for the fair valuing of digital assets, which we early adopted for Q1. And I thought it was really interesting the way we had to look at our corporate digital assets, for the standard. And there, a couple things I didn't expect were the wrapped digital assets, which I think Pat had mentioned earlier today. We, need to look at pretty much every single digital asset that is being held at Coinbase Global to evaluate it for wrapped status. And if there's a digital asset, that's wrapped, and it varies, it could be, case to case, but there are situations where instead of a digital asset, that represents more of a receivable, right? Because you have a wrapped digital asset, and that digital asset kind of represents another digital asset. So instead of recording an unrealized gain or loss on that, you might have to do like an unrealized gain loss on embedded derivative instead of a digital asset position. And another thing was that I found very interesting was we have to also quarterly evaluate all digital assets we're holding for related party issuers. And if a related party, or Coinbase itself, CVETH is a good example of that, issues a token, then it is expected that we will continue to impair.
Yeah, that makes sense. So it's, you have take FASB, the fair value, right? There's some scope outs, right? It's like 3 sentences in the thing, but when you have to actually put it in practice, it's like peeling back the layers of an onion, and all of a sudden you're into embedded derivative treatment, right? I think it's a great example of how kind of where the rubber meets the road when it comes from accounting theory to actual digital asset accounting. It can often be really complex. It can be a lot of work, and I often think that if you're not in the weeds, maybe you might not appreciate that. You might not understand how much work it really is, how much potential complexity there really is. So I'm curious from the client service side, Lisa, how do you manage that expectation with your clients? Like, are they always telling you, like, why does this take so long? Why is it so much work? Shouldn't this be simple? Isn't it on the blockchain?
Yeah, I mean, the blockchain is not a bank feed. There's no hints, there's no clues. When we do a bank feed, we can say, oh, it's Uber. We don't have to ask our client. It's probably travel expense, right? That is not on the blockchain. So there's no hints, there's no clues. So we actually sometimes lead with that conversation when we're trying to scope out a project. The other thing I think is transparency is really important. Like we focus a lot on, hey, you know what? Your USDC on Coinbase, super easy. We got you. Your 3,000 transactions on some rando blockchain that no one's ever heard of from 2020, 22, that's a big lift. Like that's a lot. And we try to explain why. Like it's not just because we say so, it's because if you're on a blockchain, and it's not even about being API'd to Bitwave, the APIs are lovely, but there's some blockchains that's super easy to get information out of. Maybe it's not an API, but we can download the information, upload it into Bitwave, everything's great. But there's ones out there that's not a thing, like that you have to really dig hard to get at the transactions for wherever our clients are transacting. And even when you find them, sometimes you're like, what is that? I can't make financial sense of that in one step. And then you have to figure out, how are we pricing this? Like, so how are we gonna price this? So we try to educate them on like, look, without making them fall asleep, that like, hey, this is the lift it takes to get some of your more complex transactions into our accounting software. And we also try to make sure that like we're asking the right questions too. Like when you start having a conversation about what's the flow of funds? where's the data? Have you planned on how you're getting your data off of your platform? Could we see some test data? And sometimes we can help our clients get to the conclusion like, wow, this is going to be hard. Like, this isn't so easy because you're asking hard questions that we don't have the answers to. So we can kind of lead them to, well, that probably means it's going to be pretty hard to pull this into financial statements.
That makes a lot of sense. I mean, so it's, the transactions themselves have complexity, right? It's not straightforward. And when I think about, one of the great things, the frictionless nature of digital assets also means you can spin up immense volume real quickly. So Dave, I have a question for you. I think, as accountants, we would like every single transaction to be accounted for perfectly, right? We love completeness and accuracy. But how do you manage that balance between, perfectly accounting for every transaction when you may have really high volume, really complex transactions? And to Lisa's point, it may be actually hard to get the information you need, from your client.
Yeah, I think one example we can share, we have conversations with the clients, right? There's an accounting cost or overhead to processing it, and we try to be mindful of that, particularly if they're not going through audits or publicly traded. So an example of that might be that they have lots of low dollar value dust amounts of gas fees to pay for something. It might be like publishing on Arweave, and it's okay, you spend $200 a month on gas fees, and that covers 700,000 transactions. We're not going to add those into Bitwave. We're not going to have that be a company wallet. We're just going to expense that $200 when it goes out as gas fees, and it's all on chain one day if it's needed for auditors, but we're going to save that complexity, get the close done quicker, just materiality threshold at the end of the day.
Right, so you're saying it doesn't make sense to pay for, hundreds of accounting hours for my worthless NFT transactions? Is that what you're saying, Dave?
That's about spot on.
Yeah. So Josh, I'm curious, from an internal company perspective, do you also deal with that expectation battle, whether it's dealing with other stakeholders within Coinbase, whether it's other, departments that you have to report to? Do you ever face anything similar?
Yeah, so it's similar but different. Coinbase launches a lot of products. We are always launching products, and there is a lot that needs to happen in between when you launch a product and when that product shows impact in your financial statements, right? So we have a really small but mighty group at Coinbase known as our business controllers, and what they do is they work with our product and engineering teams to really understand a product. They then create posting rules, which go into our data pipelines. Then our finance data team needs to make sure that the data is flowing through the pipelines as expected. Then we get it downstream to the accounting team, which is like, us sitting up here. And we need to make sure that the transactions are hitting NetSuite correctly, and also the data looks good so we can complete analysis workbooks for, audit support and things like that. And then finally, after all of this is done, and this is an oversimplification of the process, it's very detailed, there are lots of problems, but finally when all of this is done, financial reporting will pull that from NetSuite and add it to our quarterly or yearly financials. So it's just a lot of teams working together to get to that same goal of getting accurate numbers into our financials.
Makes sense. Dave, do you ever, with any of your clients, advise them if they are considering a new product launch or anything like that?
Absolutely. There's a mix, I would say, of tactical and strategic. Like Lisa mentioned before, getting tactical in terms of what blockchains is it on, what symbols is it on, where are the data sources of truth? Can we get that in the crypto subledger, or is it a manual process? From that standpoint, then we step back from the FP&A lens. How does the team think about the business? How do we need to report your revenue? Is it by different product lines? What blockchains? It's on from that example. Expected US dollar amounts, so we get into flow of funds and treasury management. Normally we have revenue come into revenue wallets for ease of tagging, but we don't need millions of dollars sitting in there, sitting idle, so then sweeping it to treasury wallets. Also, if the client is profitable, right, and they're earning a non-stable coin crypto, we've seen it in crypto winters in the past. They earned lots of ETH and it was $4,000, then it crashed to $1,500 and they didn't sell any for taxes. That becomes real punitive, so make sure we're liquidating it shortly after earning it if taxes are an issue. would be a few. Lastly, I'll share too, a lot of clients have multiple legal entities, so making sure the right legal entity is actually the one involved in the flow of funds.
Oh, yeah, that makes a lot of sense. What about you, Lisa? Do you ever have that, your clients coming to you saying, oh, we're going to build this marketplace, we're going to build this new product, we're about to deploy this new thing. Do you have those conversations?
Yeah, I mean, I think it's always, we were taught, we've all said it, we've said it a bunch of times, it's like, invite your accountants into the room, please. Like let us come sit and listen. Like, the earlier we're involved in talking about the next most exciting thing you're doing, the better we can react to that instead of being reactive to it. Like, there's been clients that have been like, oh, by the way, like, we launched this thing, and we're like, oh my God. Like, it would have been so much better if we were ahead of the curve and thinking about these things with them. We're not going to stop them. I mean, at the end of the day, like, look, we're the accountants. Like, we're not going to be like, no, you can't do that. We're going to find a way to account for that, but it's so much easier if we're part of the process. Let us in on the fun stuff too once in a while. Like, let's talk about that exciting thing that you're doing so we can figure out how to react to it and how to account for it. So we do we love all of our clients. I say it's like my children. I love them both equally, but sometimes I like one better than the other. It depends on what's going on with them. And we feel that way about our clients. We love them all, but the ones that invite us into the room and collaborate with us right from the beginning, they're our favorites because we're there in the beginning and we can make the project more successful if we are.
That makes sense. Now, this question wasn't on our prep, so I'm you guys are putting you on the spot. But, you all kind of mentioned something about how, the impact on the accounting finance process of these operational decisions, whether it's the structure of a smart contract, whether it's a new product launch. Do you find, and Josh, maybe I'll start with you internally, other, that operations side of the house, are they receptive to that feedback from the accounting and finance teams, or do they say, does it feel like the tail wagging the dog to them of like, hey, we don't want to design this around accounting, we want to just do our thing?
It's a mixed bag. Some people will respond well to it and they'll help us out and they realize, okay, they have an important job to do for us. It might be a little annoying or tedious what they're asking for, but, we know that they have a job to do. And others will be like, we have a lot of engineers and product people at Coinbase, and sometimes they'll say, I don't understand why I need to do this, or you're impeding my process. I want to build a product, whatever. And you just got to explain to them, we're here to do a job. We want to keep clean books and records. We want to be the most trusted company in the space, as our CEO Brian always says. And once you explain that to them and explain really why you're doing what you're doing, I think most people kind of get that sense of appreciation.
That makes sense. Now, Dave or Lisa, do you ever have those conversations with your clients of, hey, this thing you're doing operationally is actually, making your process overly complex or making your financials hard to prepare?
Happy to start first. I think what Josh said is spot on. It's really building a relationship with them. We have a lot in common in terms of it. The operations teams don't like as well having people spin up wallets out of left field and not knowing about it. Also just having poor wallet hygiene. Nobody wants to have an oopsie when they're moving money around. So I think it's easy to kind of build those relationships together. Also, if they want to get towards their metrics and KPIs, right? If it's not set up in a way that we can help produce those numbers, then they're not going to be as successful in their job. So we're successful if they're successful.
That makes sense.
And I think it's a journey. Like, literally the same client, we're watching their bank feed and like tens of millions of dollars are flowing into it. We're like, hey, did you guys do something? Like what's going on? And they're like, oh yeah, we raised our Series A. We're like, well, thanks for telling your accountants, So it was like, that's kind of like, that was, many years ago. We've been with them a really long time. And then though, within the last year or two, like, they're getting ready to undergo an audit. They have a new product. They launched the new product. And then it's like, the way you're doing that here in the US, friends, like, that is going to bring some attention on you that you don't want. And it was that stop everything moment. So like, I think to get from like, it is hard. Like, it's hard to be the ones left sitting outside the room and the ones that when you say something, they stop and listen. It takes time. In startup world, sometimes we don't have the luxury of time. But I think it's about building relationships. And we didn't get angry with the money rolling in. We're like, well, I guess they'll be around for a little while, so that's good news. But it's just that education, like, hey, if you had told us, we would have been ready and we could have put these things in place. Now all of a sudden you have an audit coming and you're not audit ready. Once you post Series A, often it comes with an audit. So if you'd have told us it was coming, we might have approached your accounting with a little more rigor, knowing that that was coming. So once you start like just having those open conversations with your clients, you can get there. It takes time.
Yeah, makes
And
sense.
patience.
Yeah, you're talking a lot about relationships, the intangible nature. I feel like it's been a common theme today. A lot of folks have talked about the people side of this business, of this industry, what it takes to be successful. I know, none of you work alone. I know from working with all of you, you all have, teams that support your processes. So I really want to make sure we capture how you guys think about that. Maybe Lisa, I'll stick with you here. How do you think about building the team at Fuel 3, right? I mean, you guys, your firm was new as a few years ago, so you're kind of starting from scratch. So, what was important to you in that process, and has that changed at all? What's important to you today?
I think, culture is important to us. As a couple of people have talked about that we literally started the day with talking about people and talking about that. So certainly our culture is important. But specifically looking for candidates, and we'll come back to culture when we talk about what we look for in a candidate, like I think we need accounting skills for what we do. I just, whoever said or you just quit the band, like that was like the best line of the day, by the way. If she's still here, that was amazing. But we feel the same way, sort of, but we're doing accounting all day long. So accounting is our product, right? So we need accountants first and foremost. And it's just accounting, like 80% of what we do, someone said this already, and it's true, 80% of what we do is regular old accounting. At the end of the day, it's debits and credits, even the crypto transactions. So I need strong accounting skills. We feel like we can teach the crypto, and we actually have. I think we've only hired one person with crypto experience. The rest we've trained ourselves because we learned in the trenches. Like we learned when if you Googled hey, how do you account for an airdrop or a sale of an NFT, it like you could hear it laughing at you. Like it literally I could hear it laughing. So we learned by doing, we learned by getting our hands dirty and taking these accounting rules and applying. So we really feel like we can bring somebody up to speed on that. What we can't do is train the who they are. And to us, the who they are is really important. It's like an insatiable learner. Like this is the wild frontier of accounting that we're in. So it's new every day. Like you have to be, it's like learning a foreign language where people are constantly adding new words to it and new phrases every day. So you have to be willing to learn and really want to learn every day. I think you have to be an unstoppable problem solver. Because it's new, it's different. You have to be able to pull at those threads, get the knots untangled every day. And you also have to, I would say you have to be patient too. You have to be patient with yourself because you're pulling at those strings some days. You're not solving all the problems that day. Like you have to have the patience and the grace with yourself to say, I'm not gonna figure that out today. Or the software is not working. It's never Bitwave, it's not Bitwave. It's never Bitwave, it's never Bitwave. Reports run like that all the time. It's never, but there's, the software is new too. Like everything's new. So you have to be patient and you have to be a collaborator. Like you have to be not afraid to phone a friend. Like to sit in a room by yourself, and figure this out, it's not possible. The stuff that we've talked about just preparing for this, we're all dealing with the same things. I'm not going to be afraid to call one of these guys if I have a question of something that they know more about than me. I think that's super important, and I can't train those things. Like those are the things that I feel like you're either that type of person and excited to live that life every day, or crypto accounting might not be for you.
Yeah. Isn't that the power of events like this, right? Where you can connect with people that are going through the same thing. It's so interesting to me that you said you've hired one person with real, crypto accounting experience. Dave, I'm wondering are you seeing that same thing? Is it hard to find, folks with that experience or what are the opportunities you're seeing out there right now?
Yeah, I completely agree with Lisa. To me, it's great if they have Web3 background. Many don't, but what verticals are you familiar with? We can paint parallels. Vocabulary is what intimidates people by far, and it's more than half the battle, just getting comfortable from that standpoint. But they have to be a problem solver, like you said, intellectually curious. You can kind of tell within a day or two if somebody's just probably not cut out for crypto because they're constantly coming back and they're not trying to toil with it on their own. I know others have talked about, I'm extremely optimistic about Web3 for career paths. I think back kind of like being professional services, SaaS accounting 25 years ago, where the folks who first learned it, they were real specialists. They built very fruitful careers. Now everybody knows SaaS accounting in terms of finance and accounting shops. And Web3, it's been around since we want to call it 2013, but in terms of professionalization, it's only the past couple of years. So I think it's really a wide open field for those who want to invest a future in it to really build a name for themselves and a long, fruitful career.
Like that, opportunities abound. What about you, Josh? What are you seeing when you're looking at maybe potentially new candidates coming into Coinbase, maybe folks coming out of school, are you seeing anything currently that you weren't seeing a handful of years ago, anything like that?
Yeah, I'm seeing much more opportunities for young people in the space. So I graduated back in 2014, and obviously Bitcoin was created in 2009, but if you wanted a job in crypto back then good luck. There just weren't many, and there were some if you could find them, but there weren't many. But yeah, these days, Coinbase has accounting interns for the first time ever this summer. So, and they're doing like real work. They're not going to get coffee for the manager. They're working on the 10Q that we're filing next week. They're getting into our data pipelines to learn, how that works and how does that impact, what goes into our financials. They are creating presentations about protocols that they're interested in. They're doing a lot, and it's really great to see that. And just to build on top of that too, I saw that some of our interns are in a blockchain club at NYU, and that of course is something very new. So if you determine in college that you want to get into the space, then you could break into it if you try hard enough.
Josh, I feel like that's a good reminder for me, maybe some of the older dogs in the room, that that desire for learning. There's more and more information out there, so you gotta keep that fire alive to keep learning new stuff, learn the new chain, learn because it sounds like the young folks are doing it. That's super exciting.
And I would pile on the intern thing too. We just have, so we're smaller. We're a fairly small firm. There's 10 of us right now. And we said, what, let's try an intern. And for us, it was like, this might sound bad, but it's low risk, right? It's like, well, if we suck at this, he still gets to put it on his resume. And we'd call him a crypto accountant, and it's a summer job for him. So it was a really good way for us to say, can we do this? And for us, we're an external accountants. So we need billable hours. So we needed to figure out, can we get somebody up to speed really quickly on our clients, on the work that we do, and have them be a contributor. We weren't looking at him being a contributor. We want him to have a good experience with us, but that's part of it. And for us, it was kind of a test. Just because the founders want it doesn't mean our team's going to be good at it. So what's this going to look like where the rubber meets the road? So we did it. First of all, we got a brilliant intern. I get to give him credit where credit is due. He's amazing. But so is our team. Our team has really stepped into we taught them, they're teaching him, they're giving him the time that he deserves. So literally last week, we hired a recent college grad. He had a lovely internship. But what really we found, and we were stunned by this, was they taught him QuickBooks at college. He had an entire course on it. So he comes with, and they had to account for a business and do all these things. And this was it's this little middle of nowhere college in Pennsylvania, and it surprised me that that's what he got there. So I think for us going forward, the things we'll think about with young people, certainly all those things I talked about, the personality, you got to be a learner, you got to be flexible, all these things. But I think I would be thinking about what's the program look like. I have a child in college going for accounting, and I'm confident that where I'm spending my dollars, they're not teaching him QuickBooks. So I would look for that. If I'm thinking about hiring from a particular college, I would think about that. I would understand what's the program, and I would go back to the same college. If you have success with your interns, you go back there, and maybe you're hiring graduates from that same space. We're super excited about it. It's something I'm super excited about, just knowing that there's an opportunity for us to speak to people in college and maybe even high school and make Web3 not a scary space. That helps us as accountants, and that helps all of you out there with projects. The more we talk about it, the more we get in front of younger people to bring them into the fold, I think the better off everybody is. I
like that approach a lot. I think we've definitely seen this at Bitwave. I'm sure anybody in the audience who's had to fill a role on their team, a lot easier said than done to find that digital asset accounting talent. Well, thank you so much. But before we go, I'm putting you on the spot here, because Fuel 3 made some new T-shirts this year. And I saw the sentence on it. I said, well, you have to bring this up on stage, because this, I said these are real practitioners here. And if you know what this sentence means, then you know exactly what she's talking about. It says, we both know you have more wallets, right?
And since you stayed till the end, I have T-shirts for everybody.
Wow. How about that? We're giving away T-shirts. Well, guys, thank you so much. It's a pleasure to work with you guys regularly. Thank you so much for being here. This was a lot of fun.
Thanks for having us.